Morgan Stanley, as I mentioned, out with first quarter results. Christina Partsenevelos joins us with fresh comments from the bank's management. Christina.
Well, we know Morgan Stanley posted a revenue and earnings beat, but profits have actually fallen 20% from a year earlier. And I just got off the phone with Morgan Stanley's CFO, Sharon Yeshaya, and asked about that drop. She said that the Q1 benchmark from last year was very high, and that was before we entered a period of high interest rates and the war in Ukraine. So obviously, that's created a much different backdrop today. In the press release, CEO James Gorman said that the investment bank has been, quote, constrained. This is investment banking, something we saw from Goldman Sachs results yesterday. But unlike Goldman Sachs, Morgan Stanley was able to beat estimates, especially from its bond trading desk. So I asked Yeshaya about the deal-making environment, and she said she's proud of the investment banking results and that the uncertainty still lays with customers getting a little bit more comfortable with this high-rate environment, which, of course, has influenced their wealth management business. Morgan Stanley is seeing more customers move their products into cash products, money markets, and treasuries, a trend we've been seeing across the board in the last 2 months. Lastly, I did ask about the regional banks' SVB fallout and changes post-March 10th to their business. She said it did impact investment banking, but overall the impact on the bank was negligible. So a pretty optimistic call, and you can see, well, the shares were up, but I'll throw it back to you, Joe. Let's just bring that up. Down. There you go. Down 3%. Yep. But
3%. There's no deals going on. And as you pointed out, year over year, not great. Better than expectations for revenue and the bottom line, but year over year, affected by the macro environment that investment banks and other financials are in right now, I guess.
Exactly, which is why we entered a rate environment that increased so dramatically post that Q1 quarter of last year that's why a lot of the banks are saying, hey, it's not necessarily the greatest benchmark because it was so strong last year, but that was before the entire macro environment changed. And so that is, I guess, the big point they're trying to make. But nonetheless, you're still seeing a little bit of strength from the banking side, specifically with fixed income. And it's interesting, though, that everybody's moving over to cash products when we're talking from a customer standpoint.
Right. All right. Thanks, Christina.
Thank you.